Stocks sip back after a strong open ahead of F&O expiry today. Realty and consumer durables are the big drags, while metals and PSU Bank gain.
Indus Towers is in focus as the Supreme Court ruling has allowed the centre to review Vodafone Idea's AGR dues. And following recent collections, Indus Towers has written back a provision against dues from the beleaguered telco, and that has given the stock a leg up.
Indian Oil Corporation surprises analysts with a significantly stronger than expected Q2 performance on higher refining margins. The visible cutback in imports of Russian oil by Indian refiners recently, however, clouds the outlook.
Trading at MCX fails to kick off as scheduled, and the exchange points to a technical glitch for the delay. This is the second instance in 4 months when technical issues have disrupted trade at India's premier commodity exchange.
You're watching us here on Halftime Report. We come to you live from the CNBC-TV18 Motilal Oswal studio. I'm Mangalam Malu. With me as always, Ekta and Vinny. The Nifty down about 100 points. We're down, not quite out. Remember, over the last 3 or 4 trading sessions, every time we've crossed past that 26,000 mark, we've seen some supply to only close below that 26,000 mark. And today, all the more important because it is the October series expiry, a series that belonged fair and square to the bulls. Nifty, despite a 100-point cut, has seen a 1,200-point rally in the month of October. So that does fairly well today.
Hi, afternoon Mangalam, afternoon Ekta. So in terms of overall, you've rounded up, we're watching out for the expiry points coming in as well, and you know how that leads to some bit of a volatility. But look at the IT pack. That is also clearly seeing a bit of a sharper fall. Nifty IT is down 0.9%. So no support coming in there. The broader end of the market, that's subdued in today's trading session. And bank also is not something that is leading a support or lending a support to the market. It's also down almost 0.5% in today's trading session. So overall, sector-wise, also we're seeing some bit of a muted performance coming in from banks, IT. That is some pressure there.
Yes, absolutely. Hi, guys. Well, yes, it's turning out to be a weak session. It is F&O expiry day. We have the Nifty, which is below 25,900. And we also have the 2-day FOMC meet, which begins today. So that would be something that the street does have on its mind. In terms of results today, we have Tata Capital, Adani Green Energy, Adani Total Gas, as well as Happiest Minds, M&M Financial Services, Shree Cement, all of these companies which will be releasing numbers. So a lot of the broader market stocks or broader markets will be in focus on account of that. But let's in fact kick off the show with what is now turning out to be the news of the day. The trading is delayed in MCX again. It's around 3 hours of a delay that we've seen in terms of no trade, citing technical issues. Manisha is here to take us through more details on this and what this exactly means. Manisha, 3 hours, what's the explanation which is given?
Well, as of now, we do understand that there's no direct statement coming in from MCX except telling us that there is a technical glitch there. The trading as and when it begins would be from the disaster recovery side. What time will the trading start is something that the exchange is not sharing at this point in time. Earlier, it was that it would start by 9:30 and then 10 and then 10:30. But since then, there only is one statement that has been blinking on the exchange website and that is that the commencement is delayed due to technical issue. Trading will start from disaster recovery side and time of commencement of trading will be informed. But remember, it's 3 hours done and we still have no timing in sight. It's quite bothering because MCX is 98% of commodity derivative market share in India. And this is exactly where you go to trade gold and silver and base metals and energy and some of those agri-commodities as well. And with no trade being able to done right now, especially given that the commodity markets are quite happening right now, is bothering brokerages right now. We have with us now Mr. Kunal Shah, Head of Commodities at Nirmal Bang. We also have Jaiprakash Gupta joining us from Dhan. But Kunal, to you first. And 3 hours gone and there is no trading happening right now. I do understand that there are other exchanges where you can perhaps take a position, but this is where you have your hedge, your trade and your numbers standing right now. What is it that the exchange is telling you right now?
So yeah, we've been told the same, that there is technical glitch. Beyond that, we don't have any answers to that. So we are awaiting reply from the exchange. And the moment we get it, then we'll inform our clients. But as of now, there's nothing coming out of from exchange rather than just a technical glitch. That is what we've been hearing from the exchange.
Kunal, I have been speaking to so many brokerage houses since morning, and we do understand that since TCS has come in, there have been concerns when it comes to trading orders getting confirmed, late arrivals of settlement fees is another thing. In the month of July is exactly what we discussed about, and now we're standing here in October talking exactly the same thing.
Yeah, so this kind of stuff should not be happening. So very difficult to know, but there are issues sometimes regarding the margin files getting delayed and all these things. So I think sooner these issues get resolved, better for the ecosystem, because there are no other exchanges where we can anyone can counter hedge it. So most of the volumes takes place on MCX. So the other exchanges which are persistent. The volume in gold, in silver, in crude oil futures is negligent. So I think in this kind of scenario, if any big movement takes place, so what if gold goes down by $100, $200 in a span of 3 hours, what we've been witnessing? So what clients will do if something like that happens? So this kind of stuff should not happen, and I think MCX will make sure it won't happen again.
Jaiprakash Gupta, thank you for joining in as well. And what is your sense right now? How are you dealing with this exchange not open for trade at this point in time? What are you telling your clients?
Yeah, hi Manisha. So I would just want to say that it's very unfortunate, on our trading sessions like currently, when our users want to log in at 9 a.m. or want to start trading and they're not able to do that, there is some kind of discontentment which comes from the user. And our team has been regularly in touch since 9 a.m. in the morning with the exchange. But till now, there is no resolution which is in sight. We are trying to salvage the situation by asking our clients to also look into the positions of the exchanges. So as of now, we are still awaiting any kind of clarification.
Mr. Gupta, you said you're telling your clients to look at positions on other exchanges, but what are the kind of volumes that we're looking at in those exchanges? And a day like this, do you think that could really work? Because as we've been constantly repeating that 95 to 98% of volumes actually do happen on MCX.
No, I agree with you. But, for a situation like this, when the clients have their open positions, since both the exchanges are having a different clearing and settlement, it becomes really tough for a customer, who has created a position with some kind of strategy to offset the trade in one exchange with the other. So definitely the users, the clients are facing the challenge as of now. But whatever little we can provide to them in terms of comfort, we are trying to do that.
Mr. Gupta, also, as and when the trading opens, as it does today, we will perhaps be looking at a gap down, because since the markets have opened today, gold has been continuing to slide down. So has been the case with crude as well in some sense. What has been the precedence earlier when exchange opens with a delay and there is a movement that we've already seen in prices? What is usually done in those cases?
No, for users who already have an open position, for them it's a dilemma now. Whether somebody is long and the prices are going to open gap down, they hardly have any room to salvage their positions. Either the stop loss gets triggered, or if they're lucky enough, they'll be able to exit the positions on time. Now, if we go strictly by the term being used, which is a technical glitch, we as members, we have to report it as a technical glitch to the regulator. Now, it's again, the clarification has to be given whether the technical glitch was from a member side or from the exchange side. So those clarifications will definitely be sought by the regulator. But for the time being, the client knows the member. Okay, any client who is trading, they only understand that the member or the platform which is being given, they should be able to allow the clients to square off the trade. So there will be a lot of concerns being raised to us. Our customer support desk is receiving numerous calls since morning.
Absolutely.
And we are trying to inform them that the issue is not with the member but with the exchange.
We understand that, because MCX, of course, while it's talking to its members and brokerages, but it also is talking to the regulator at this point in time. The details of therein is what we are awaiting at this point. Kunal, when we look at, take a step back right now, and the last time we saw a glitch with MCX was in July 24th, 2025. Before that was in October 2023. That is when the TCS takeover in sense of a technical partner was happening. And before that, it was in Feb 2023. And at that time, the exchange was shut for almost 4 hours. There was a suspension. And this was because of the exchange was migrating to the new technical partner there. We've seen some of these instances, 2 in 2023, 1 and 2 now in this year is what we are looking at. How are you? What is the conversation with brokers as an association? What is the plan B really that you are negotiating with the exchange?
I think there will be serious concerns raised because this kind of stuff should not happen, because technology transition is a one thing, and during working hours. So actually the COMEX starts from early morning, and from 9 o'clock Indian market starts. So it's already 12, and till now, we've not received any notification. So ever since the markets have begun, I think gold prices have already gone down by $50. So I think whoever is having a long position, and if they want to square off those long position, they cannot. So what about the stop losses? What about the risk management practices? So I think these are concerns which needs to be addressed. And associations, all the commodity association, they will raise these concerns, but I think it lies in the hands of the technology partners of MCX and MCX to make sure that this kind of stuff doesn't happen. But from the market point of view, whatever is happening is not good.
Kunal, also a final one for me really on trading, as you said, as Jaiprakash also said, that other exchanges is where some clients are taking opposite position to ensure arbitrage positions perhaps to save themselves. But when it comes to BSE and NSE, and yes, both of them do have their commodity platform there, what really is the volume therein? And are these exchanges and that platform seen only when you have a problem here at MCX?
No, I don't think so that immediately today they can accommodate the volume, because if I'm having a position on MCX and I'm getting relatively illiquid depth, in both of these exchanges, then I would be skeptical to forward or do counter hedge. So I think right now there is no option. But in the interest of the markets, if other exchanges are liquid and vibrant, then definitely this would have been a very helpful day in this kind of moments. So I think the other exchanges should take enough effort by realizing that they do have a space. If this kind of event takes place, then they do have a marketplace where they can adjust and accommodate this kind of volumes and then eventually gain traction. So this kind of event will make sure that there is a need for other exchanges, and if enough efforts are given by the exchange and the market participants to make them liquid, then they may have a better future going forward.
Oh, yes. Jaiprakash, so with the kind of day that we are having in right now, for commodities, it's not half a day done, because we trade from 9 a.m. to 11:30, 11:55 p.m. in the night therein. So it's a long day really, and the US markets are yet to open. The European markets have opened. For all you know, because of the US Fed meeting going forward, there would be a lot of volatility in US as well today. How are you, and how long are you willing to wait for the exchange to start opening? Would you rather have some statement from the exchange right now to know where you stand today?
See, we don't have anything to do now, because it's all up to the exchange to let us know when they can resume the trading or when the trading can start. We have been representing the fact, through associations. The concern has been raised to MCX top management, and we hope that going forward, these kind of glitches are taken care of.
Okay, all right. Manisha, thanks very much for taking us through that conversation. Jay, as well as Kunal, for bringing your perspective in. So we will be tracking this story very closely. As you can see, the MCX stock is down around 2%. But Manisha, just before we let you go, it's multiple times that this has happened. You mentioned that it's happened twice in this year itself, in this less than a span of 6 months.
Right.
Does it now slowly erode the confidence of the company's operational viability when it comes to, say, such large volumes? What is your editorial feedback on this?
So, Ekta, this is a topic, and these are exactly the same words we've used the last couple of times as well when this really happened. But having said that, even after those last two glitches in 2023, and this is the second one in 2025 is what we are dealing with. Even with that, the kind of volumes and the kind of participation that we have on the exchange, even after a day like this, we've seen people go back and start trading onto this one, because the kind of positions that you're holding, the open interest that you have, and the liquidity that you have is very, very strong. As Kunal was just telling you, it's unfortunate that you do not have another place to go when this happens on one exchange, because BSE and NSE, even as they do have the license and they do have commodities listed on them, they're not liquid enough. The exchanges, the other exchanges perhaps haven't put might enough to start pulling in liquidity or have more participants or develop their commodity sense so strongly that they can continue to function. So if you have to trade commodities, I'm assuming you have to go back to MCX yet again.
Okay, all right, Manisha. Thanks very much for that. So this is really the fear of what a monopoly can also do. Thanks for joining in. We'll take a short break. But on the other side, we're going to get you the latest on the Tata Trust battle. Parikshit will be joining in for that. Stay tuned. Welcome back. Well, for the markets, it's weak, but let's concentrate on a couple of big stories which are developing. We spoke about MCX, but the other one that one needs to really look at is the big developments in the Tata Trust battle. Sources close to Tata Group says Melli Mistri's reappointment as the trustee on the Tata Trust board is unlikely. Parikshit joins in with more details on this story. Parikshit.
This is indeed a big setback for Melli Mistri, the director of Meher Palonji Group and one of the key trustees at Tata Trust. His reappointment as trustee for life is unlikely to go through. This after a majority of trustees have voted against his reappointment. Melli Mistri's term was set to expire on October 28, and ahead of that, Tata Trust had circulated a letter seeking views of different trustees on his reappointment. We're told that Noel Tata, Venu Srinivasan and former Defence Secretary Vijay Singh have voted against his reappointment. The only support for Melli Mistri coming from Darius Khambata and Jahangir H.C. Jahangir. Now, in these circumstances, Melli Mistri's reappointment cannot go through. In any case, reappointment of trustees for life has to happen unanimously. Even if one person had voted against Melli Mistri, his reappointment would not have actually gone through. Now, tensions within the Tata Trust have been continuing for some time. This includes how Tata Sons should actually be controlled and whether Tata Sons should be publicly listed or not. Let's see whether Melli Mistri accepts this. Before the reappointment of Venu Srinivasan, he had put a condition stating that he would support Venu Srinivasan only if in future all trustees of Tata Trust were reappointed unanimously and for life. Now we have to see whether Melli Mistri will throw up a legal challenge or not.
Right, with that, let's talk stocks back again. We have a bunch of stocks which are moving around. Vivek joins in with that list. Vivek, what do you have today?
Well, thank you so much for that. Well, advanced decline ratio was quite strong just an hour ago. But what's actually transpired is that, especially in the last half hour or so, you have seen that particular ratio come down quite significantly. There has been some amount of selling pressure at high levels. In terms of stocks that are doing quite well, Sun Pharma, Advanced to Spark, that particular stock, the top gainer as far as the NSE 500 index is concerned. Very good volumes on this particular name as well. Syrma SGS, yesterday a whole host of companies actually got the nod as far as electronic component manufacturing schemes are concerned. A key beneficiary is Syrma, up over 5%. JK Tyre, one of the few tyre companies in the last few quarters that's done quite well. So JK Tyre is doing quite well after posting a strong Q2, some margin expansion seen over there as well. And have a look at the entire metal pack. While the market is quite weak, most of the metal names are holding out quite steady. So names like Tata Steel, Welspun Corp, JSPL, all of them trading with gains anywhere between 1% and 4%. And lastly, in the list of gainers, Car Trade Tech, has been very volatile, but a strong Q2, profits almost doubling. That stock continues to stay high by over 7.5%. On the other hand, quite a few laggards as well in terms of stocks that are seeing quite a bit of selling pressure. The exchange names today, both BSE as well as MCX, both of these stocks are under significant pressure. BSE down over 3.5%. Entire PSU banking pack, has been on a roll last few weeks, but today most of them have cooled off a little bit from the day's highest point. Supreme Industry, yesterday a volume guidance came across. A lot of EPS estimates got cut. Stock down by over 4%. Hindustan Oil Exploration, a dispute that the company has with HPCL. The company has given a clarification despite that stock over 6% lower. And Bata VQ2 is something that has dragged this particular name lower as well.
Okay, Vivek, thank you so much for that, for the list of stocks that are moving around in today's trading session. As of now, Nifty at 25,850 levels, down almost 100 points in today's trading session. But on that note, we're going to sip into a very short break. After the break, we'll have Sachithan Nandatekar from Trade Bulls, who will join us to talk to us about trading strategies as well as technicals. Welcome back to Halftime Report on CNBC-TV18. Like we looked at the market just before going into break, 25,800 levels approximately there is what the Nifty is trading at. But it didn't sustain the 26,000 mark. Now, what does that mean? What's happening in the world of FNO right now? Let's go across to Mangalam, who's at the FNO desk. Mangalam.
We're in a bit of a range right now, and that's exactly what the expiry session is likely to play out as well as today, because you have the Nifty, which is lower. The Nifty Bank is lower as well. The Nifty Mid-Cap Index is not as low as the other indices, and that's a mild positive, which tells you that this is just consolidation and not a major trend reversal for the frontline index. The only thing is that ahead of the expiry, and this is something that we've been pointing out for the last couple of trading sessions as well, the India VIX has been moving higher, which is indicative of some call writing. And, that's something that has kept the up move after a 1,200-point rally slightly limited. And that's something that we've seen over the last 5 or 6 sessions as well. 3 of the 5 or 6 sessions in the last week, we've seen the Nifty cross past that 26,000 mark. But none of those occasions, it actually closed above 26,000. So October 23rd, when it hit that 26,104 mark, it fell about 200 points from there. Thereafter, yesterday as well, the high was close to 26,000, a little over that, 26,006. We fell again from there, and today's high, 26,041, and we're a good 180 points away from that level too. But metals are doing well, so that's telling you there is some element of risk on. So Tata Steel, JSW Steel, Hindalco, all of them doing well. What's not doing well are some of these steady defensives. So we have financials which are not doing well, some of these consumer names not particularly doing well as well. And because it's expiry, a lot of the straddles are written. What is a straddle? Which is a call and a put at one strike price together. What's the closest strike price right now? 25,850. So if you look at the 25,850 call, has a premium of 60 rupees, almost 153 lakh options or 1.5 crore shares in open interest. And look at the 25,850 put. That too has a premium of almost 30 rupees, an equal number of shares in open interest, telling you that these two have been written fairly vociferously today. And a premium roughly of 50 rupees tells you that around 25,800 to 25,900 is the range that the street is expecting in terms of expiry today. But if it does sustain above 25,900, then those call writers may start feeling a little jittery, and a move towards 26,000 cannot be ruled out. Just watch out for a couple of these major heavyweight indices. So the Nifty IT and Reliance, those are the two that I'll be tracking along with Nifty Bank for any signs of recovery, and they will be the first ones to tell you if the Nifty will sustain above that 25,900 mark or not.
Okay, all right, Mangalam. Thanks very much for that. We have Sachithanan Nandatekar joining in from Trade Bulls to discuss the technicals of the market now. Sachithanan, hi, welcome to the show. Well, it's turning out to be a session where we are seeing some amount of profit booking. We're probably going to see, the volatility pick up in the second half. How are you placed today?
Good afternoon, Ekta. Good afternoon, Mangalam. I think clearly what we have been observing is that 26,000, 26,050 has been a kind of a resistance for the market for the last 4 trading sessions. But if you look at the overall setup, after 14 days of higher top, higher bottom sequence, it is 4 days of consolidation, which sounds very healthy for the next wave of the market. So I think from a trading perspective, we may see this particular consolidation getting carried forward. At least for the day, we don't expect the Nifty to close above that 25,920 mark. We are expecting that the expiry could be a bit lower than that. And on the lower side, in the last 3 weeks, the Nifty has defended its 5-day exponential moving average support very well. Now, this particular support is currently placed at 25,000 840 zone where it is currently trading. So I think it will be very significant. If we see any slippages below the same, then there is a good chance that the expiry may also be closer to that 25,750, 740 kind of a zone. So I think it's a very tricky situation. It depends on the next half an hour. In case if we see a stable movement above that 25,840, 860 zone, then there's a good chance that we may see the expiry closer to that 25,900 level. But beyond that, the probability looks bleak. When we look at Nifty Bank, I think it has been one of the strongest. The consolidation is very healthy. We have a sequence of inside bar formations on the daily scale. Eventually, we see this particular index outperforming, and we expect that the November series could be very significant for this particular index. We are expecting a move towards 59,080 eventually. So here, I think any declines would be a good opportunity. Currently, the supports are placed at around 57,800 thereabout. So I think in case if we see further slippages, then that will be an ideal level to reposition or create some fresh long positions for an eventual target of around 59,000.
Sachatan, what are your top bets then?
Good afternoon, Vinny. We are looking at metals from the metal pack. JSW Steel is something that we are liking, what we have recommended to our clients. If you look at the 60 minutes chart, there is a broadening formation with a base at around 1150, which has been reconfirmed. Now, the overall expectation is that there could be an immediate swing towards the higher bound, which is placed at around 1220. So we are recommending building fresh long positions in JSW Steel futures. In the November series, the stop loss can be placed at around 1162 on closing basis for an immediate target of around 1220. The other stock that we have recommended to our clients is Naukri.com. Now, if you look at the overall sequence, the stock was in a low top, low bottom sequence. But if you look at last 15 trading sessions, it has managed to retain its swing support at around 1340, 1360 kind of a zone, which looks like a triple bottom formation in making. Now, this particular move will be confirmed once we see the stock, confidently trading above that 1380, 1400 mark. We are expecting that there could be a breakout soon in this particular counter. If you look at the ADX, it has started to trend up. We have already seen the stock confidently trending above its 5, 20, and 50-day exponential moving averages. So I think the overall setup looks good. We are expecting a quick move towards 1440. The positional target is placed at 1470. The stop loss for the trade can be placed at around 1355 on closing basis, and then the stock can be added in your trading portfolio in the for the November series.
Okay. All right, Sachatan, and we're going to leave it on that note. Thanks very much for joining in and taking us through all of those strategies at this point. Just want to point out that NetWeb is actually just about flying away in today's trading session. The stock is up around 6% It's gained around 11% just in these two trading sessions this week. And obviously, it's been a rank outperformer, up around 50% this year. The numbers come out on the 1st of November. The analyst meet will be held on the 3rd of November. And the analyst call will be held on the 3rd of November, which is on Monday. So I think the street is really bracing themselves for what they could possibly report this Saturday in terms of their Q2 numbers. We'll take a short break, but up next, we'll get you our movers and shakers segment on halftime report. Stay tuned. Welcome back. Well, it's a weak advanced decline ratio on our hands at this point in time, but we do have a lot of stocks which are buzzing in our movers and shakers segment, where we will be focusing on stocks which are on the move. First up, we do have Bata, which is in focus. Mangalam, take it away.
Well, it was a quarter which was disrupted by a few things, and that's reflected in the numbers and more importantly reflected in the stock price movement as well. Start of the quarter, one of their biggest warehouses saw some disruptions, as a result of which that impacted the quarter. Thereafter, we had the GST announcement that came in, so transition on that hurt as well, because 80% of their entire line is sub 2,500 rupees a pair, and that meant that there were some changes that had to be made out there as well. And to liquidate that inventory, the company had to go ahead and take markdowns on their prices, and as a result of which the gross margins and EBITDA margins saw a bit of a hurt. And add to all of this, there was this VRS, one-time voluntary retirement plan that they've started in one of the plants, and as a result of that, there was an 8 crore one-off expense, and the net profit as on the back of that saw a decline of 74% year on year. We did speak to the management, and a couple of things that stood out. One, festive season sales have recovered well. The premium products are doing well too. So on the back of some commentary from the management, the stock saw amelioration, but it was a weak quarter and there was no taking away from that, and which is why the stock continues to stay under pressure with a cut of 4%.
Okay, that is Bata, but let's move on to the next one. And JK Tyre, that's also in focus today, right now holding on to gains of 3.5%. Darshan is here to talk to us more about that. So Darshan.
So JK Tyre has reported a healthy set of earnings, and not only JK Tyre stock is up, all the other tyre stocks are also higher because of this, seeing a rub-off impact. And if you talk about all the headline numbers, all the numbers have seen a double-digit growth, and after several quarters, company has reported margin of more than 13%. It's an expansion of more than 200 basis points, and this has come despite an increase in the raw material cost that company has seen, both on a sequential basis as well as YOY. Now and remember, both the segments, India as well as Mexico, in both the segments, company has reported volume growth of 15%, 13% respectively. And now it's saying that going forward also, company will be able to maintain the margin of levels around 13 or more than that. And that would be led by the recent GST cut that government has announced, that is helping a increase in the demand across these segments. Company is seeing a double-digit growth in tractor segment, high single-digit growth in PV segment. Even from CV segment, the growth is of low single digit.
All right, Sudarshan, that's about JK Tyre. Sai Silks, that's been one stock which has been surging right from the word go on the back of their numbers. Good performance coming in, Vinny.
Absolutely good performance that's come in from Sai Silk. Overall good numbers that we're seeing, and management commentary when they spoke to us also has been good. So firstly, in terms of numbers, look at the net profit. That's up around 70% on a year-on-year basis. Revenues up 28%. Margin seeing an improvement as well. 16.2% is what the EBITDA margin came in versus 15.8%. The management also said that, they expect that 15% growth guidance that they've given, that is something that they will sustain for the full year. Though right now for the first half of the year, they've already managed to see 34% growth. But yes, they expect strong growth to continue through the year as well. Margins will remain stable around the 16% mark. And will be interesting to see increase in terms of margins, where they will go from here on. As of now, good improvement in terms of margins and what they've seen. And store openings is what they're positive on going forward as well, Ekta. So today the stock is massing in trade.
Okay, and now let's go across to Pasna, who's watching Keynes Tech and Syrma SGS. Tell us more.
Well, MEIT has approved projects, 7 projects to be precise, worth 5,500 crore under ECMS. This is mainly for manufacturing of copper-clad laminates, PCBs and even camera modules. Now let us look at the key beneficiaries on the back of this. So Keynes has received approval in all categories that they applied, that is multi-layer boards, HDI boards, camera modules and even copper-clad laminates. Syrma and Amber has received approval in only one category versus the various others. The category in which they have received approval is for multi-layered boards. Now coming to SRF, they have received approval for polypropylene films, is what we know. Now, let us look at what the Elara Capital is saying on the back of this. Now, Elara Capital expects the companies to benefit under ECMS, similar to the PLI scheme that the government had announced. This is subject to meeting the requisite criteria. Now, it also expects other EMS players such as Dixon Tech, PG Electroplast, and various others under the other product categories to also be benefited in the subsequent approvals that will be coming through. Now, it believes that this will help to continue the EMS momentum that is going forward right now in the upcoming seasons as well. even after the mobile PLI ends in March 2026, for which the main approval is awaited. So all in all, if we see, Keynes and Sirma are the key beneficiaries, which explains why they are leading the EMS.
Okay, thank you so much for that, Upasana. But we also caught up with the management of Keynes and Sirma SGS on the scheme. Listen to what they have to say.
Manufacturing is concerned, our land we have acquired, our building has come up already. We are almost in the completion stage. Whereas machinery we have ordered, it is in the pipeline. So considering all these things to meet the timeline what ministry is expecting, we will be there well within the timeline.
The first application is for multi-layer PCBs. This would be a plant with a capacity of 2.5 million multi-layer PCBs at full capacity, with a targeted investment of about 765 crores. It is coming up in Andhra Pradesh. We expect to start the construction somewhere next month. I think in coming years, India will become a hub of component manufacturing. I think this is a very, very commendable step.
Okay, all those stocks buzzing around, Amber also included in that list. We'll take a short break, but we'll get you more on the markets and lots of stocks in focus, so stay tuned for that. Welcome back. Well, for the markets, the Bank Nifty has just about broken into the green now, so just about 60 points higher. Just watch out for Sai Life, because that stock should show up for you. It's up around 2% at this point in time. There is news that they will be doubling their R&D capacity with their new Hyderabad facility. So that's the reason why you're seeing it buzzing in today's trading session. But besides that, they are also releasing their numbers on the 6th of November, which is basically the week after. So that's the reason why you're seeing some amount of momentum on Sai Life. So doubling R&D capacity, which will start possibly in September of 2026. So that's the news coming in for Sai Life. But let's shift focus. Our colleague Madiha spoke to Cochin Shipyard's Mad Nair on the shipping business opportunities in India and their order book. Listen in.
So if you want to look at numbers, then we are much lower than 1%. 3 countries in the world, which is China, Korea and Japan. Merchant shipbuilding, that's what I'm talking, is about 93% of the world. So it's lopsided at this stage. So, but let's not get disheartened by what we are saying. I think as a country, probably the focus had not been there. The focus is now pretty much strong. The Honorable Prime Minister has laid out the vision with our Maritime India Vision 2030 and the Maritime Amritkal Vision 2047 scheme of things. And your question, how much does it take to reach there? It takes quite a lot.
What is Cochin Shipyard's order book looking like right now in terms of making merchant vessels?
We are currently, our order book is about 20,000 crores, out of which about half of that is from the merchant vessel space. And as a company, we have already created a very large new dry dock. We are invested in ship repair. We have created a new international ship repair facility. Almost 3,000 crores of investments has been completed. So those are already completed last year. But as we are moving forward, we will create new core infrastructure. We will create infrastructure in Kochi, where we are our main dry dock, and the new dry dock has been set up. But we'll also on the west coast of India, in Gujarat, we'll set up a new ship repair ecosystem, teaming up with the Deen Dayal Port Authority, the Kandla port, repair ships. So we will work on both shipbuilding and ship repair as we move forward, and there will be further investments.
Okay. Lastly, sir, how many MOUs are you signing at this year's Maritime Week?
At the Maritime Week, we are having 8 MOUs across different spaces.
Okay, could you please elaborate on how many and which are these MOUs?
We just completed a large one is with the HDKSY, which is Hyundai of Korea for shipbuilding. With Dry Docks World Dubai, we are doing ship repair. With Deen Dayal Port Authority, we are doing for the ship repair ecosystem, the Dredging Corporation of India, with Cochin Port Authority for land to build up another fabrication facility, with IHC of Netherlands for dredger making. So these are the main ones.
What is the value of the MOUs, sir?
I wouldn't want to talk on the value, but then they are significant and substantial.
Right, with that, we'll take a short break. On the other side, we'll focus on Indus Towers. That's the stock that is reacting to its second quarter earnings. Stay with us.
Welcome back to Halftime Report on CNBC-TV18. As of now, Nifty has seen a recovery coming in, especially in the last half an hour. 25,900, about that is what the Nifty is trading at. Just 26 points down in today's trading session. And apart from that, hourly gainers that we're seeing in the last 50-odd minutes, IDBI Bank, that's seen a jump up. We're seeing IDFC First Bank, Chennai Petro among some of the gainers, especially in the last 1 hour, that have come up from the day's lowest point, now trading almost near the day's highest point, are all these stocks. So keep an eye out on that one as well. Ola Electric, also you can see the update coming in at the bottom of your screen, so keep an eye out on that one. Ola Electric managing to hold on to gains of almost 1%. Clearly a recovery coming in the markets from the day's lowest point. Mid and small cap, mid cap actually has moved to the green side as well, so keep an eye out on that one. But let's talk about Indus Towers, right? That's surging in trade after its Q2 earnings. Rima is joining in with us to give us details on this front.
Thanks so much for that. So two positives in Indus's numbers this time. One, EBITDA beat. EBITDA margins expanding by 180 basis points sequentially. And this was aided by a reversal of provisions that the company used to make for Vodafone Idea. So in Q2, it reversed about 195 crore of provisions. And secondly, there was an acceleration seen in the tower. So the tower addition in Q2 at 4,300 was an improvement compared to Q1's level. Jefferies has upgraded the stock to a buy. They believe the risk reward is attractive because they're assuming about a 6% profit growth plus dividends to resume at some point, which will be a big trigger. So 7% dividend yield. So risk reward is favorable. Target price 425. IIFL believes downside risk for Indus Towers, does not exist now because Vodafone Idea will survive. In fact, earlier they thought that, there was a 15% probability that Vodafone Idea won't survive. So they'd bake that into their analysis. Now they assume zero. So target price for IIFL also goes up. And CLSA is the highest, high conviction outperform with the target price 520.
Okay, all right. Target price of 520 by CLSA on Indus Towers. Thanks, Rima, for that. Well, for the market, definitely recovered. 25,941 is currently where we're at. So above that 25,900 odd level in today's trading session. We're just about 0.4% off the day's low at this point in time. With that, it's a wrap on Halftime Report. Business Lunch, however, will take all the action forward. Stay tuned.